Welcome to the Option Guy. Today, we are diving into one of the most exciting Greeks in options trading, which is Gamma. By the end of this video, you will know exactly what Gamma is, why traders love it, why they fear it, and how you can use it to your advantage. Trust me, this is going to be a roller coaster. Ever wondered why an option suddenly becomes super sensitive when the stock price gets close to the strike? That's gamma in action. And here's the thing, gamma can make your portfolio explode or your losses spiral out of control. Think of it like riding a roller coaster. The closer you get to the top, the faster the thrill and the scarier the drop. So, what is gamma really? Gamma measures how much your delta changes when the stock moves by 1 point. In other words, delta tells you how much your option price moves. Gamma tells you how fast that sensitivity is changing. If delta is the speedometer, gamma is the turbocharger that makes it spike. Now, let's make the difference between delta and gamma crystal clear. So, what is delta? Delta is speed, which means how fast your option reacts to price changes, whereas gamma is the acceleration. It tells you how much faster delta itself will change. So if delta is the speed of your car, gamma is the pedal pressure that makes your car zoom quicker and quicker. Now let's see a real life analogy. When you look at your car dashboard, the speedometer shows your speed. That's the delta. But when you press harder on the accelerator pedal, your speed changes faster. That's gamma. And just like driving, if you're not careful with gamma, you can lose the control of your car. Now, here's something what every trader must know, gamma is always the highest at the money. Why? Because when the stock is right at the strike, even a tiny move change the probability of finishing in or out of the money. That's why at the money options behave like rockets. One small move and suddenly the option transforms completely. Now let's take US stock, which is Apple, for an example. Suppose Apple is trading at $250. The delta of the $250 call option might be 0.45. Now, if Apple moves up just by $1 to $251, delta might jump to 0.55. That's gamma, making delta shift instantly. And in that moment, your option suddenly behaves like it's too much more stock alike. Now let's take an example of an Indian stock, Infosys, which is trading around 1500 rupees. And at the money call might have a delta of around 0.48. If the stock rises just by rupees 10, delta can jump to zero point 0.6. Here's the same logic. And at the money option in any market, US or Indian market, are where gamma hits the hardest. That's why day traders often focus on at the money options. They move with lightning speed. Now, here's the real battle, long gamma versus short gamma. If you buy options, you are long gamma. That means you benefit from volatility. You want big swings, you cheer for chaos. But if you sell options, you are short gamma. And that means small moves are fine, but big moves, they can hit you like a bomb. That's why sellers love quiet markets and hate surprise news. Now let's see what gamma scalping is. So, pro traders don't just watch gamma, they use it. They adjust their position as delta changes, buying or selling shares to stay balanced. This is called gamma scalping. It's like constantly tuning the dials on your trading machines. Done right, It's a way to profit from volatility. We'll go deeper into this in a future video. Now let's see what are the risks of high gamma. High gamma means your delta is changing super fast. That's great if you're on the right side of the move, but terrifying if you're wrong. This risk is especially high near expiry, when options are cheap but gamma is explosive. When small move and your PNL can swing widely in seconds. Now let's have a quick recap. Gamma is the acceleration of delta. It's highest at the money. Long gamma loves volatility, whereas short gamma fears it. And it's the reason options don't just move, they can suddenly come alive. And that's gamma, guys. The roller coaster of options. Handle it wisely, and it can be your best friend. Ignore it, and it can wreck you. In the next video, we'll cover Vega, the option Greek that rules volatility. So make sure to hit the like, subscribe, and share this video with your friends because nobody should be left in the dark about how options really work. I'm the option guy. Thanks for watching, and I'll see you in the next one.